I haven't uploaded to YouTube in nearly 4 months, but during that time something important happened. My investment portfolio crossed £6,000 and honestly my entire investing strategy has changed. I'm now 19 years old and I've officially been investing for just over a year, starting back in April 2025. When I first started, my portfolio looked very different. It's far more speculative, far more emotional and honestly, far less structured. But over the last year, I've slowly shifted away from chasing hype and towards building something I genuinely believe can compound long term. So in today's video, I want to break down my full updated 2026 investment portfolio, the biggest changes I've made, the lessons I've learned after 1 year investing, and why I think my mindset around money and investing has completely changed. This isn't a get rich quick portfolio. This is me trying to build a real long-term foundation at 19 years old. Now, why did I stop uploading? One thing I realised over the last few months is that I didn't want to force uploads anymore. A lot of finance content online feels very rushed, very reaction based and very hype driven. Honestly, I don't want my channel becoming that. So instead of forcing videos every week, I spent the last few months refining my portfolio, researching stocks deeper and learning about portfolio construction. I also wanted to understand the risks I was taking and thinking seriously about the type of investor I want to become over the next 10 to 20 years. Because anyone can buy a trending stock during a bull market, but building a portfolio that you genuinely trust during uncertainty is completely different. And that's where my mindset has really changed. Now, I'm sure you're all thinking, how has my investing strategy actually changed? When I first started investing, I was attracted to what most beginners are attracted to. Hype sectors, fast growth, speculative stocks, and the idea of finding the next big thing. And to be honest, social media heavily influenced that. You constantly see huge percentage gains, overnight success stories, people turning £500 into thousands, and investors acting like every stock is going to explode. But eventually, I realised something important. Most successful investors don't build wealth through excitement, they build it through consistency. And that's completely changed how I approached investing. Instead of asking, what stock could double next month, I started asking myself, what portfolio can I confidently hold for the next decade? That single mindset shift changed everything. I reduced speculative positions, I increased my ETF exposure, focused more on diversification, and started building around long-term themes instead of short-term hype. And honestly, my portfolio looks much more boring now. But boring is often exactly what works. So, let's go through the actual portfolio. The portfolio is currently worth just over £6,000 inside my stocks and shares ISA on Trading 212. The biggest difference now compared to a year ago is that every holding has a purpose. Nothing is just there because it's trending. My current largest holding is FTWG, the Invesco FTSE All World ETF, sitting at just over £2,000, and honestly, this ETF represents the biggest shift in my investing mindset. Instead of trying to predict which country or company will dominate over the next decade, FTWG gives me exposure to thousands of companies globally. That includes companies in the US, Europe, emerging markets, Asia, and developing economies. This ETF is effectively the foundation of my entire portfolio. It gives me diversification, low risk, broad market exposure, and long-term stability. One of the biggest lessons I learned this year is that diversification isn't about lowering returns, it's about increasing survivability. And survivability matters massively in investing. Because the longer you stay invested, the more compounding works in your favour. My second largest holding is EQQQ, the Nasdaq 100 ETF. This is essentially my growth engine. The Nasdaq contains companies such as Nvidia, Microsoft, Amazon, and Meta. These companies dominate AI, cloud computing, semiconductors, software, and digital infrastructure. I strongly believe technology will continue driving global growth over the next decade, but what's important now is balance. Earlier in my investing journey, I probably would have overexposed myself to tech. Now I intentionally pair EQQQ with global diversification through FTWG. That combination gives me high growth potential while reducing concentration risk, and I think that balance is incredibly important. Another major shift in my strategy has been my focus on dividend investing. Not because dividends are free money, because they aren't, but because dividend investing changed my psychology around investing. When you start receiving income from your portfolio, even small amounts, you stop focusing purely on daily price movements. You begin thinking more long term. You start seeing investing as ownership instead of gambling. Honestly, that mindset shift helped me massively. My dividend portfolio now focuses on stability, cash flow, reinvestment and lower volatility. And over time, I want that income stream to continue growing. One holding I'm particularly confident in long term is ASML. ASML is one of the biggest and most important semiconductor companies in the world. They produce the advanced EUV machines needed to manufacture cutting-edge chips. Without ASML, Nvidia would struggle, AMD and Intel. Much of the AI boom becomes much more difficult to scale without ASML. It's effectively a monopoly-level business in a critically important industry, and these are the type of companies I'm now trying to focus on. Businesses with real fundamentals, strong market positioning and long-term relevance. An addition I had already in my portfolio was iShares physical silver. This is something I added for diversification rather than growth. Silver gives my portfolio non-equity exposure, inflation protection and a hedge during uncertainty. One thing I've learned is that good portfolios aren't built for just bull markets. They're built to survive difficult periods too, and silver helps add another layer of balance. So, what are my biggest lessons after a year of investing? Number 1. Consistency beats intensity. You do not need to invest thousands immediately. I started with only £200. Small consistent investments matter far more than occasional large emotional decisions. The habit matters more than the starting amount. Number 2. Most people overestimate short-term gains. Social media makes investing look fast. In reality, wealth building is slow. And honestly, accepting that made investing much less stressful. Number 3. Diversification reduces emotional investing. The more diversified my portfolio became, the less emotional I became, because no single position could massively damage the portfolio. That creates stability, psychologically as well as financially. Number 4. ETFs are incredibly powerful. At the start of my investing journey, ETFs looked boring to me. Now they make up the majority of my portfolio, because over time I realised you don't need to predict winners if you own the market itself. Number 5. Investing is mostly psychological. The technical side matters, but controlling emotions matters far more. Fear, greed, impatience and comparison. Those things destroy more portfolios than the bad companies do. Going into 2026 and looking at 2027, my goals are very simple. I want to continue increasing my ETF positions, want to grow my dividend income, stay consistent with monthly investing, reduce unnecessary risk, and publicly document the journey. Because one thing I've realised is that this channel isn't really about stock picks anymore. It's about documenting long-term growth, not just financially, but mentally as an investor. And hopefully, over time, people can learn from both my success and mistakes. So that's my updated £6,000 investment portfolio at 19 after just 1 year of investing. Honestly, I'm far more proud of the mindset shift than the actual portfolio value itself, because building good investing habits early is probably more valuable long term than chasing those fast returns. If you're building your own portfolio, especially as a younger investor, let me know where you're at in the comments. And if you want more honest investing videos, ETF breakdowns, portfolio updates, and long-term investing content, subscribe and follow the journey.